Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What we got going on? Well, we did hit the record highs, right? In the NASDAQ and the S&P have not hit the record highs in the Dow and the Russell yet. Those may be coming. We'll see how it all plays out. But we got those new records up there. Now, we have a short trading week this week, so they can push the market pretty much any direction, up or down, on light volume, right? The traders will come back next week. And I do expect next week to be where the start of the pullback starts to happen. Now, we can still go much higher, but nothing goes straight up. And we've had a great run, right? I mean, everything went straight up. Back in April, everybody was very negative, right? They were all saying the market's crashing. Now, back in April, I told you we were going to climb up to new record highs, and we've done that. Now everybody's excited. This is a breakout. We're going to the moon. I'm not so excited. Maybe we got a little more upside, but really, we're pretty much stretched now. I think we're going to start to pull back before we get a run higher. We're going to have a pullback. Now, the reason I think this is because we've gone kind of from the Magnificent Seven. Used to be 7 stocks pulling us up, right? We're down to about only 3 stocks. I mean, really, you got NVIDIA, you got Microsoft, and you got Meta. We lost three of them really bad. Apple, not doing very well, right? Tesla, not doing very well. And Google, not doing very well. Those 3 we've kind of lost. And we got left with 3, and one's kind of floating around in there somewhere. But anyways, the leadership is getting so narrow, it's got to pull back. It just does. It just can't keep going. You can't have one stock pulling up the whole market. Doesn't work that way. It's going to come back in. Once again, just my take. I'm sure your take's probably completely different. Now, my take is different from a lot of people. I get a lot of comments that say I'm crazy, say I'm out there in left field, and that's okay. I don't expect you to agree with me. You don't have to agree with me. You listen to me. Obviously, you're watching me. Use my information to make up your own opinion. Watch other people, see what they say. But what Wall Street is telling you is that everything's fine. Everything's rosy. Look at the stock market. Things have never been better. We're at record highs. Now, this is just not my take. There's a lot of problems out there. And the biggest problem, obviously, the $37 trillion elephant in the room is the debt bubble, right? The debt bubble going to pop. The economy's fake. It's completely fake, right? I mean, we print an extra $2 trillion a year. We have a budget deficit of $2 trillion. You take that away, we're already in a recession. But they can say we're not in a recession now because they print $2 trillion that we don't have. We bring in about $5 trillion, and they admit that we're printing $7 trillion, right? An extra $2 trillion. And they add that to the GDP to make it look like we're not in a recession. I guess technically they would be right. We're not in a recession, but there's a huge problem. This is not sustainable. The reason it's not sustainable is because, of course, the debt market, right? Now, here's the thing. You see, the Federal Reserve, now they've been kind of winding down their balance sheet. We were up at 9 trillion and they kind of dropped it down to 7 trillion. But here's the thing. Here's the secret. They don't want you to know this. They haven't sold any of the long bonds. They hold those on their balance sheet. Why? Because they're toxic. No one else wants to buy them, right? They got $7 trillion still, and no one wants to buy the long bonds. Now, if they were to sell their long bonds, you would see the bond market crash, and you would see interest rates go up above 10%. 12% on your mortgage would be common, 14%. Your mortgages would be going up higher if they were to sell the long bonds. You see, as Rick Rule wants to call them, they're called the owl bonds, because when you go to sell them, they say, to who? To who? I love when Rick Rule does that. But they're the owl bonds now. The regular mainstream long bond is now an owl bond. Now, Rick Rule rule calls the owl bonds the HYG, the junk bonds, because when the problem comes, the HYG is going to come crashing down. Why? Because it's not liquid. Everybody's going to be going to sell, and they're not going to be able to get out. They're going to just crash that marketplace. It's going to crash to the downside. The HYG is going to pull down the market with it. Now, it's going to happen when we go into the official recession. Now, we're spending $2 trillion more than we have right now. Now, nobody can really explain why this is common to do in a recession, but what happens during a recession, that 2 trillion extra will increase to 4 trillion, to 6 trillion. In 1 year, we're going to spend $6 trillion. Now, why does it work that way in the recession? What happens is you get mass layoffs, right? So the layoffs, people are getting laid off right and left, right? So your tax receipts go down, 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 down. So you're losing tax receipts, but you got to send out more in stimulus in the form, well, just unemployment checks will be going way off the charts, right? So your expenditures go way up and your tax receipts go way down when a recession comes. So that's going to bring us to 4 trillion, maybe $6 trillion budget deficits, right? But right now they're admitting we have a $2 trillion budget deficit. Now, just in the next year, we're going to have $9 trillion worth of bonds rolling over, right? They come due. Bonds come due. Most of our debt now is short-term debt. We still have some long-term, and that's owned by the Federal Reserve. But most of our debt is now short-term. So we have to sell $9 trillion worth of bonds plus another $2 trillion. And if we go into a recession, it's going to be more like an extra $6 trillion. So we're going to be looking to unload $15 trillion of bonds on somebody. And who's going to buy them? Nobody except the Federal Reserve. Federal Reserve will be the buyer of last resort. Their balance sheets at 9 trillion was the record high. Comes down to 7 trillion, but it's going to shoot way past that 9 trillion because they're going to have to step in and be the buyer of this $15 trillion in bonds. So you're going to see their balance sheet exploding higher. Now, a lot of people don't think that, well, they think that the Fed's going to cut rates down to zero, and I would agree with that. Stupidest thing the Fed could do, but our Federal Reserve, awfully stupid people running it. So they will reduce the rates down to zero. They're talking about only 2 rate cuts this year. My guess there'll be emergency rate cuts when the market starts to drop. The big rug pull's still coming in the stock market. That'll come with the official recession. Anytime you go into a recession, the stock market drops between 30 and 60%. And sometimes, I think this time it's going to be a great big recession, and we'll probably overshoot that 60% and watch the stock market drop about 70 or 80%. That's just my take. I know that's not your take. Now, a lot of people believe when the Federal Reserve comes out and says that inflation is at 2%. They believe the Federal Reserve when the jobs numbers come out that we're running 4% unemployment. I don't believe either one of those. And you don't have to listen to me. You can go with your own opinion. You can go with the opinion that the government gives that we got 2% inflation right now. My take is when I leave the house, I spend a lot of money. Why? Because things are expensive. Went to a professional baseball game the other day. When did the price of beer hit $20? $20 for a regular sized beer. How does that happen? I don't get it. But I'm telling you, the stuff that I buy still going up. There's still inflation. They'll tell you it's 2% because they want you to feel good. They want you to feel like everything's okay. Everything is not okay. You see, they stopped talking about 3 things right now. They stopped talking about the tariffs. Tariffs haven't been settled. There's no trade deals. Tariffs are still coming, right? What else have they stopped talking about? Well, they stopped talking about auditing Fort Knox. I mean, that went away, right? They were going to do it like the next day. Then they said, Mr. Trump, we don't have any gold in there. You can't do an audit. So they don't talk about it anymore, right? The gold is gone. Okay, I get that. What's the third thing they don't talk about? The banking crisis. The banks are still in terrible, dire straits. Why? Because the bond market went from 0 to 5%, so the banks lost 40 to 50% of your deposits. They haven't made this back yet. They're hoping the bond market recovers. Good luck with that. I don't see it happening that way. This time I do see interest rates going down. It's going to be called negative rates, right? That's going to be negative 20% overnight. It's called a bail-in. They're going to bail out your money, and they're going to say it was a negative interest rates on your deposits. They're going to take 20% of your money in the bail-ins, maybe more. If you get 80% of your money out, you're going to be very lucky. I don't mean to scare people. This is just my take. I have a little bit of common sense. No, I'm not a prophet. No, I don't know that this is going to come true. You can believe that inflation's at 2%. Now, a lot of people believe that. A lot of my friends believe that. A lot of people that watch the channel, they believe that, right? Okay, let's say we're at 2% now. Well, here's a problem. Just this year, the dollar has dropped 10% against every foreign currency out there, right? Every other currency is now 10% higher than the dollar. Right there is 10% inflation, just that alone. When the tariffs hit, that's going to be a minimum of 10%. Trump's talking about 50% for a lot of these countries. But let's just call that 10% also. We got 10% the dollar. Now the dollar down 10% this year, right? This year's only halfway over. You continue on this pace, the dollar's going to be down 20% this year. Tack on the 10% in tariffs, which is very, very conservative, right? 10%. Donald wants much more than 10%, but you get 10% of the dollar, 10% there, that's 20% right there, right? Now this thing called, oh my goodness, the big beautiful bill. Oh my goodness. This thing's 1,000 pages long, right? They keep adding to it and adding to it. Trillions and trillions of dollars in debt. This big beautiful bill is going to push upon us. This is a problem, right? This is inflationary. We got a lot of inflation, right? It's coming. It's coming in the form of money printing. What are they going to do? They're going to print that money to buy the bond market, right? Because they can't have that crash. Print the money to buy the mortgages because they can't have the housing market crash. So they're going to print the money. They're going to lower rates. They're going to print the money. We got the dollar collapsing. We got tariffs going up, right? We got the big, beautiful bill. And they want to tell you that inflation is at 2%. Really? And they want you to believe that. It's a load of crap. I'm sorry, it is. Inflation's going past their 9%. The way they measured it, it hit 9%. It's going to pass it this time. Everybody can see it coming. I mean, it's just obvious, right? I mean, you can't make this stuff up. We're going back to QE, quantitative easing. I think we're already in QE. I mean, when the government is the only buyer of the bond market, the Federal Reserve has to jump in and buy it. Now, if that's not QE, somebody tell me what QE is, because that is QE. So you got interest rates going to go down to zero. You got QE. We're going to print money, right? We got the big, beautiful bill. We got tariffs. We got the dollar collapsing. Don't worry. You're at 2%. And if you believe this, I'm sorry, you just aren't seeing things. You got to get out of your house more and pay $20 for a beer. Anyways, the price of things are still going up. We're in trouble. We have to come up with $15 trillion of purchases for our bond market. Nobody wants our bonds. Do you get that? Nobody wants them, right? Look at China. They used to have $1.5 trillion of our bonds. They only have 800 billion. Now cut that down in about half. You get that 800 billion, they're going to keep lowering. You get that below 500 billion, all the other countries, they're going to be dumping these bonds. What happens when everybody dumps the bonds? Well, they all come flooding back to us, right? All the dollars come flooding back into the U.S. and we start to hyperinflate. It's very sad, very scary time, but this is just what's going on. You can listen to mainstream. I don't mind you listening to mainstream. Wall Street's going to tell you what a great job Jerome's doing. He has inflation down to 2%. He's a great man. He's holding unemployment steady at 4%. 4%. Look at by normal, I leave the house. I got common sense. I see inflation 8 to 10%. I see unemployed people everywhere. Oh, granted, they drive an Uber. That's not a job, right? You can't live indoors doing that. I'm sorry, Uber, you don't pay enough, right? But anyways, that's what people are doing. And then they're called employed. And then they say there's only 4% unemployment. I'm telling you, I think it's closer to 20%. I really believe that. This is just my take. You don't have to believe me. Believe whatever you want. I'm not doing this just to convince you. I'm doing this because of my own sanity. When I listen to these Wall Street people telling me inflation's at 2%, I just can't believe it, right? I mean, I won't tell you what I want to do, but that's what's going on, right? I mean, we got big problems out there. You know it. I know it. It's a short trading week now. I mean, Friday's the 4th of July. I'll try to get a video out anyway. We'll see if I get that out. But anyways, it's a short week. Most of you are on holiday right now anyways. Get out there, have fun, enjoy the summer. It's a great time of year. I'm Tall Mike. Bye-bye now.